big boys, how are you doing? I hope you are doing okay. Are you ready for another week of trading? So let's see what I have prepared for you and how I read some of the code data and some of the stuff that people ask me most of the time. Okay, are you ready? So let's go. Let's start with the first one. Let's start with the Australian dollar. We are seeing the bearish trend, the bearish trend on big speculators net position changing from bearish to bullish, and this is happening. Let's say let's take a look here. These guys, they are short on AUDUSD for a long time. Let's see here, guys. They are short AUDUSD since 2018. Oh, that's a lot of time. People are kicking our good friend kangaroo. Okay, and right now looks like we are seeing some love for Australian dollar. And as you can see here, on the last 3 weeks, we have a massive cut on the net short positions. As you can see here, we have big specs cutting from 65,000 to 37,000 contracts and have a net position right now of 2,300 net short positions. That's huge, guys. And of course, that kind of cutting positions reverberating price. See, this is a huge cut. What is this date? Is end of March. Let's see what 22 of March. Yes, we can see they're cutting their position right here. But one thing that caught my attention for sure, as you can see, they are just about to become bullish. Okay, and what should we expect right now? One thing that I can tell you for sure is we are seeing this behavior here happening for Australia. Australia is it's a mining country and produces iron ore, copper, and as I read today that golden mines and iron ore mines are doing good for Australia, and Australia may continue outperforming other countries during this COVID epidemic just because of these metals. And as you can see in this chart, the blue line is Australian dollar, the yellow line is iron ore prices, and the pink line is gold prices. As you can see, they are with a very high correlation, and that's what it's holding Australian dollar prices right now. And another thing that is curious that you must pay attention, let me see where it is, this window. We just saw here that the big speculators net positions is about to become bullish, and this is happening at a key level. Check this. This is a key level. This is something that we must consider. This chart is weekly. See where we are right now. So they are changing their positions from bearish to bullish at exactly a key level like this. These are not the trades that I like to do. I prefer to trade on extremes, but this one is something that we must keep our eyes on it. And I think if we see this zone right here get taken, and with increment in these net positions, we are free to go oh boy, we are free to go. People were going to say that I'm crazy, but we are free to go here. So what we need to expect right now is this high to get taken. Then we must see some market structure like this. Okay, we must expect this pullback to happen, and not just the price action, but this must happen at the same time that we see a build in these positions from big specs. Okay, if the price start to go up, let's say we see a breakout here, price break, but then we see big specs building to short positions again. Okay, you can do not take the trade. Okay, let's move to the other one and wait, and that's it, friends. Let's see what else we have here. Let's take a look on EURUSD. EURUSD, I know that have some interesting facts to talk with you. First thing, not just looking at COT data, I'm going to show you one thing that I have right here, this volatility table. What is this? What is this volatility table? I'm going to show for you for July what I'm expecting. Basically, what I did, I get all the prices since 2000, and I calculated the range for each month. For July, for example, from 2000 to today, and I get what happened in July, every month in July, and in average, EURUSD from low to high have a historical range of let's say 500 pips, just to make easier to see. Okay, and on average from open to close it go up 0.07%. So price EURUSD in July basically ranged out, go just sideways, but it's a huge move from high to low. We are talking about 500 pips. And now going back to COT data, things get pretty interesting right here. You are going to see why. We have EURUSD. Let's look only at the big specs. Big speculators are the non-commercial groups, and you must understand one thing, guys. Markets, money in the markets do not grow in trees, and they not are created. So if someone makes a lot of money, you be sure that another one lost a lot of money, or a lot of people lost some money that went to that other player that make big money. My point with this is just for you to have in mind that the amount of money available in the markets do not change a lot over time. So when you see the traders that trade EURUSD building a huge long position, and you check that since 2000, every time they reach these kind of levels right here, that's about let's say 100,000 contracts to the long side, they took profits. Most of the time we have just one incident here that they haven't. Okay, so let's work what is more have a more high odd to happen. So we just saw, looking to the volatility table, that EURUSD on July is a month that the pair range do not trend. So if we go to our chart, let's see where EURUSD is. Okay, oh boy, if you see, we are talking about 500 pips from high to low. So let's consider this. I have my red market here. It's 110. Okay, it's here. So what we must expect is this zone right here too. This range right here to hold. Okay, so this is what we must expect for July. And if we look again at these positions, the big specs positions, we are seeing that they are building their longs since the start of March. Okay, we are seeing they're building their longs, and they went building very big since last 3 weeks ago. They built a huge position of almost 2,000. They added almost 20,000 contracts, and last week looks like they start to stall. Okay, they start not adding anymore. And if you see here what they did, they also add to the short side more than they add to the long side. So what I expect right now is this quant data to perform again. So I'm going to do two things, or to trade. I'm going to wait this low to get taken, and I'm going to enter here, or I'm going to see if I can get a trade right here. Okay, that's my plan for Euro USD, and let's see what else we have. I hope this was clear. See, we are trading extremes. So these guys, they are traders like us, and they have to make profits. So when they run out of money, they don't have more money to buy. They don't have more money to, in this case, I think they have, but they will have to reallocate from other assets to trade euro, and that's not how it works inside big institutions, okay, because they have a very strict risk management control. So the most possible scenario right here is we see some profit taking, and I don't discard that they push the price up here again before they push it down. Okay, so it's very possible that this scenario we see something like this, just to go down. Okay, so let's see what else we have. Next one, let's take a look. GBP USD. Let's see what we have. Not much movement from last week to this week. We have a small build on the, you can see here, on short positions, but what we had from start of June looks like they are closing their shorts. Let's see how they are on historical basis. So this is a scenario that it's hard to take a decision right here, because we don't see any kind of trend taking place. We don't see no extreme happening, nothing like this. So this is one pair that I will remain out, okay, because I can see no edge here. These guys, they can add to shorts, they can add to longs. There's nothing clear. They have money to go to both sides of the market. And let's take a look on how prices are behaving. Let's go back here. So we have, since the start of June, when they had a big short position, start of June, it's right here. So this is so they build that huge short position around these levels. Yes, guys, so these traders right now, they are not adding longs, but they are closing shorts, they are taking profits. As you can see, on June, start of June, that is these two candles right here, they build these huge positions, and so it's possible, I think, looking this again, I think it's possible they are going to push price to this zone right here. Okay, this zone right here. So once this happens, we'll wait and let's take a look what they are going to do when they reach that prices, that price level, so we can take our decision. So right now, after taking this second look, yes, I can expect the GBP USD to go to 1.21 level again. Okay, friends, so let's move to the other one, NZD USD. Let's see what we have right here. A very similar scenario like Australian dollar. Check, you can see when the year start, 4th of February, like, let's take a small timeline here, NZD USD, Feb, yes, here. So start of February, around here, they started to build their shorts. As you can see, they were long, and 4th of February they start to build their shorts. And right now what they are doing, they are closing most of their positions. In fact, I can say that they are practically neutral on the market right now. So we can expect, looking at that trend, it's hard to say something right now that this trend will prevail or not, but if this behavior right here continues, I think we are going to see this zone get taken, and then we can see something right like this. Okay, but we have to wait, because the big specs right now, they have all the money in their pockets. So I think these guys are doing, they took the profits, and now they are just waiting what they are going to do, if the China and USA will fix their problem about trade wars, and then if they are able to continue this march up. I'm going to set an alarm here if these things get taken, and if we continue to see they're edging to their long sides, I'm going to take a long here. Okay, let's move to the other one. There's one thing that I want to show you that is just a curiosity, but most of the people don't know, but New Zealand have a company, Fonterra Dairy, that is responsible for most of the GDP of the country, and you will see how milk prices have a high correlation with NZD USD. I think it's non-fat dry milk futures. Let's change the color. Can you see? This orange line is the milk futures, and the other line is is NZD USD. Let's add a correlation coefficient GNF1. Okay. Can you see how most of the time they have a positive correlation? Right now they are diverging, but my point is NZD USD is really correlated with milk, and as we can read from the last news, China demand from New Zealand products are booming. So right now this reinforces my thought that the traders are just waiting the resolutions what China and USA are going to do next about the trade war, so they can know if they are going to sell NZD or they are going to buy NZD, and we are going to do exactly the same. We're going to wait. Okay, friends, so let's move to the other one. Let's see USD CAD. We did really nice trades USD CAD on the start of USD CAD and GBPUSD on the start of the month, on the start of June. The trade was not based on cold data, but was based on the economies reopening and demand for oil. And what we are seeing right now is exactly the opposite. We are seeing the number of cases of COVID going up, and a lot of talks about locking down again, and this will kill demand for oil. And we saw last week inventories building, and today again this is on headlines. I think it's here. That the demand for oil is going down again, and this will eventually is going to weak CAD, and I think we already can see this. Let's take a look how big specs are behaving. Yes, as expected, after building some longs, as you can see, they start to close their positions. So we can expect, let's see. See, they had a huge positions right here, and now they are just closing. But one thing that I don't like, that I told you, is these are not extremes. See, this did not reach it an extreme level, so we can be confident to go short or go long. But as we can see, we have a macro scenario building, that is the COVID spreading again, talks of a second wave, and demand for oil going down. And as you know, Canada has a high correlation with oil prices. Let's take a look how USD CAD is behaving. Yes, good. You can see here, this is a 4-hour charts. We can see that the price is inside a supply zone. Let's take a look how things are behaving on weekly. Yes, same thing. We can see here a previous supply zone that was respected here, and now price is inside of it again. So I think if we see a breakout of this zone 1.38, and we also see an acceleration of USD CAD build on long side, we can have a scenario like this. Okay. So let's move to to the other one. Let's take a look on USD CHF, the safe haven of Switzerland. Oh, that's good there practically. They practically have no positions on it. But in this case, as you can see, this price level, this level of shorts is historical, where they took profits. And let's see on charts what's happening on charts right now. USD CHF. This is a key level, and price right now is starting to rebound from it. So yes, my friends, I think this is an opportunity for us, because if we see these guys, see, they were extremely short, then they cut massively, very fast. So if we see this position changing like here from bearish to bullish, we can expect, and as you can see, it's always a lot of longs before they take profit, because in this case, when you hold a USD CHF position, you get paid because interest rate for USD is greater than from Switzerland. So I think we have an opportunity of trade right here. Let's see what this indicator can do for us, our supply and demand indicator. Okay, so the next level, we are talking about parity again, 1.0. So we are talking about, let's say, 150 pips of stop loss against almost 600 pips of take profit. So this is a trade that, yes, I'm going to take it. And let me remove this Monday high indicator. As you can see, we have this building right here, exactly. At the same time, they are holding they're closed their shorts, they close their shorts exactly on this demand zone. Okay, so we can expect the first objective to be right here, then we can move our stop loss and add another position and wait price to go here. Okay, so price is already going out of the zone. So we have an opportunity here, and what I want to see is this level here get taken and a bullish candle like this one that we are seeing right now, and then we will see some market structure like this. Okay, so we are not going to enter here, but we are going to enter when this high is get taken. Okay, so let's move to the other one. Let's see what else we have. USD JPY, the beloved yen. Talking about yen, one of the first traders that I met on Twitter was Mr. Yen. So high five, Mr. Yen. Thanks for all the support you gave me and the lessons and the good talk. And one time I had a big loss and I asked helping for Mr. Yen, and he told me the best thing to do is close your position, take your loss, and take this as a lesson. And it was the best thing that happened for me. Thank you, my friend. Thank you for all the support. So if you think you know how to trade yen, think again and go give a follow to Brian. I'm going to leave his handle somewhere here or here, okay? So let's go back to what we have right now. I think, if I'm not mistaken, we have, yes, we have a strong signal based on COT index for USD JPY. If you don't know what COT index is, I'm going to explain for you. I'm going to use this other tool. These tools, they both access the same database, but I prefer these charts yet, but I'm migrating everything to the dashboard that you have access right now. And basically what COT index do is normalize. So instead of me looking of last 20 years of data, COT index looked only for the last 3 years of data and do a comparison. And I created a small trigger to say, to tell me that we are about to see a bottom. And the COT index in this case is calculated on top of commercials. As you know, commercials, they are counter trend traders. I will leave a link for an article here explaining, and I will do a video later explaining this too. But when we have a spike, a build on, for example, on their long positions, we can expect that we have a bottom and that the market will trend from that point, okay? And this is exactly what we have right here. We have a spike, as you can see here, on commercials position. And one thing interesting from USD JPY in this case is, let me show you, right, it is, so this fundamental score is something very, very interesting because it used only, where it is Japan, it used only data like CPI, PMI, inflation to tell how the health of a currency is. And right now he's telling us that the United States is doing better than Japan, and I have to agree with that. And if we take a look on what USD JPY is doing, we had we also, sorry guys, I also separated another thing for you, that is USD JPY. Come on, my friend, USD JPY. As you can see, these price levels for USD JPY is where big specs usually take profits, and this happened some weeks ago exactly at this point. This week, building this, creating this supply zone, and we saw this demand zone get tested again last week, and price reacted from there. And what we can expect right now is this price level here. How I calculated this? How do I did this? I'm no magic trader. I'm not a magician. I'm just a guy with a calculator. And what I did was the same magic I showed for you. See, in the end, I'm a magician. It's the same calculation that I used for EURUSD. So for month of July, USD JPY also ranks about 500 pips, and what we are expecting to see is 110 level, that is this level. And why I'm not expecting price to drop? Because we already saw this place where this demand zone that was built when big specs closed profits from their shorts, and we saw it get tested here again, and we can expect price to trend from here. I already have a position on USD JPY, okay? And my friends, I have one last thing that I want to one last thing that I want to share with you. You all are going to remember the last video that I posted, one of the last, about 2000 being a weird year and the behavior of the big specs trading like commercials. They went short all the trend while price was trending up. They were short, and what they did in the last week was amazing. They closed more than 200,000 contracts. So what can I say? See, they were short a lot. They are not anymore. This can be just a pair trading that they have offset position on another asset. But if not, I have to say that some guys take some real losses right here, and I can say that it's the first time on the history that we saw retail traders winning on top of the big specs. Sorry, big specs, this time was not for you. Congratulations, retails. And that's it, friends. I hope this video was explicative, was easy to understand, and if you want to know more about something, please leave a comment, and also tell me what you think about the markets, how the market's what's going to happen right now, if we think the USP 500 trend is going to go up or to go down, and that's a $1 billion question. Okay, thank you all for watching. If you don't follow me yet on Twitter, I will leave my handle right here, and give me your like or your dislike, and subscribe to our channel. Okay, my friend, thank you very much. See you. Bye bye.